happening. I'm going to bring in Tom Teague right now. Tom, how you doing, my friend?
Good. How are you?
Good, man. So we were talking last night. You think that Trump has played into China's hands on this tariff thing? Did I read you right?
I think that they underestimated the sort of international coalition with that and the power that China has.
Yeah.
When they started this like shock and awe view of how to deal with tariffs. And I think that, I'm not going to try and say that there's 4D chess being played here, but I think that Trump thought it would elicit very fast reactions from some of our trading partners. And, I certainly know less than they do about what's going on with our trading partners.
Right.
I can see headline numbers, but, Japan, their major trading partner is China over US. Mexico is a huge trading partner. I've done some work looking, all the sort of flows, and the headline numbers are not that big. I mean, again, I don't think this is just, and I'm not trying to dodge your question, but I don't think this is just a matter of the actual trade balances. I think it has a lot more to do with China's hegemony and challenging that, and challenging sort of the left's, the globalists, the WEF's economic strangle on the world, and sort of blowing that up. But I don't think that, if anything, Trump anticipated that this sort of dollar sell-off would precipitate from this. I think he kind of thought, that markets would adjust. And they said it didn't matter, but we all know it does matter. It especially matters when the bond market's getting whacked. And like, if you look at the foreign ownership of treasuries, like, bills don't really matter. I mean, they matter from a funding perspective, but what affects normal Americans, mortgages, corporations borrowing, all that stuff is really notes and bonds. And foreigners have
for our audience, the longer term securities.
Yes, correct. Like, notes are basically from 1 year to 10 years, and then bonds are after that, right? So foreigners own in aggregate, I think, around, high 20% of that. So it's a meaningful amount. It's not everything, but it's
they can impact the market materially, right?
Yeah. So I think there's been like a coordinated dollar sell, buyer strike of US denominated assets, including equities. I mean, for the last 10 years, I think probably, I've seen like huge numbers, but foreigners sort of wealth in equity markets, 70% of that was in the US. So our markets had huge tailwinds from foreign investors. And I think that there's been a big unwind in the last, month and a half of those assets. Part of it's the yen trade. Part of it's just the sort of remilitarization and view that Germany was going to be spending more money. But I think that, like, from what I've seen, which is really interesting, is there's like sort of this new kind of anti-American kind of leftist Europe pro-China coalition forming.
That was going to happen anyway, right? I mean, this was just their plan. They were just waiting until this happened, then they had it ready to go, I think.
No, I think that's the case, and I think that was their reaction to what Trump did. And like I said, I don't think it's just about tariffs. I think it's about, you mentioned earlier, the stuff going in the military, the stuff going in the universities. I think Trump is a big disruptor, and I think what he's doing is he's turning the U.S. away from, what's happened in the past and this trail we're going down to everyone be sort of a slave of China. The other thing I think he realizes, and I certainly realize this, I don't think a lot of people on Wall Street do, is we opened up sort of as a nation in June 2021. China did not really open until December 2022. That was like 15 months later, or maybe even longer. So
well, they had the zero COVID policy, right? I mean, they were like
correct, but why did they have that, right? And I think we saw this, like, so if you look at our trade balance with China, we import like $550 billion worth of goods from China every year, like around 300. We have a $290 billion trade deficit, and we have $300 billion of consumer goods imported from China. It's not a huge number because the cost of goods sold on the S&P 500 is around 12 trillion. But then you start looking at all the other trade that comes through Canada, comes through Mexico. Everyone's biggest trading partner, China's in the top 3 or 4, or either the top. So when they slowed down opening on COVID, and we had demand from opening up on COVID, and Joe Biden spending money like a drunken sailor with all of his deals and all of his acts that he did, we had demand all of a sudden, and there was no supply because everyone in the world is so reliant on China. So I think that made our government, I mean, it made Trump at least understand that we don't want to be put in that position again, because look at what happened to interest rates. Look at what happened to inflation, right? And that's even the Fed, who I'm not a huge fan of. They've said that this was really, the inflation was about supply chains. And it's not just our trade with China, it's everyone else's trade with China and our trade with everyone else. So what Besson and Trump are doing right now is trying to move away from that so that we don't have this situation again, and China can do this to us. And to make an assumption that China isn't behind the scenes, like strategizing how to take down the US, I mean, it's just naive.
Everything you see happening, including, what's going on with the EU and China. I think the India-Pakistan thing was from China. I think they instigated that. That was like a in your face. Okay, you're going to do this. We can start nuclear wars.
Yeah.
So
correct.
Anyway, what do you China did blink this morning though, right? I mean, they're saying they're going to remove some tariffs on certain products because their factories, literally, there's a lot of press coming out on Zero Hedge and others that the factories are empty. They're closing. The ports are empty.
Well, there's a huge amount of propaganda from China that like they're this like world power and we're indebted and we don't spend our money on our country, and they do.
Yeah.
China, if you look at their sort of local level debt, it's estimated between 112 and 148% of GDP, like that, including their government debt. So they're very indebted, like all of these countries are.
Much worse than us, actually.
Yeah, absolutely. And a lot of it's artificially low yields, and that's why people won't buy it. And so a lot of it's manipulated, but it's kind of like a Potemkin village, what you see there. Right behind it is a huge amount of debt.
It's a Ponzi scheme. You've got all these loans, and then the collateral's used like 45 times.
Right, exactly. It's like shadow banking stuff. Yeah. And so I don't think China they're trying to demonstrate that they have this like ridiculously strong hand. We can't see what's going on in there. They were also, they've also been denying negotiations with us with tariffs where they denied COVID, right? And the origins of COVID. So like, I don't believe you can trust anything that China says. And I also, not only are they responsible for COVID, but in my opinion, they're responsible for the inflation we saw. As I pointed out, their lag of opening up when we were opening up after COVID caused inflation. That supply chain, them gumming that up. And I think that's a huge problem, and we have to move away from that. Apple's saying they're going to manufacture all of their cell phones that they sell to the US, which is about 40%, I believe, of their cell phones.
In India, they're moving it from China to India.
Right? Yeah. And so I think there's definitely going to be winners. And, the media is largely intertwined with Hollywood, and Hollywood's movies are part of this. Like China said, they're going to ban the movies. So the media is being overly critical and dramatic about what this is going to do.
Well, there's a total narrative going on.
Yes, 100%. 100%.
We've been all over that. I mean, it's like legacy biz media narrative that China is going to win and Trump's stupid.
Right.
That's essentially it.
Right. And I mean, that board that Trump pulled out, maybe that wasn't good optics, but if you drill down, that's not what it was really about. It's about, we're sitting here giving all of these countries military umbrellas. They have trade imbalances with us. They have high tariffs. There's things that we can't get into their markets. So it's kind of like you're going out with friends and you always pay for their dinner every single time. At some point, you're like, okay, I'm done with this. You need to start paying for some of this.
Well, there was a poll out of Finland that I watch all this news from Europe, and it's so slight. skewed. I mean, they were saying we can't trust America anymore because because they're pulling their military out or whatever, and we can't be defended. And I'm like, dude, defend yourselves, right? I mean,
Right.
what's up with that?
Yeah, well, I have a friend who lives in Sweden I spoke to this week, and he's pretty psyched that they're starting to invest in their military. Like he's kind of the mind, like this is something we need to do for our own security. And I think it's great. I mean, I absolutely think it's great. Like I welcome that. So
totally. Tom, we're going to take a quick break. We'll be right back.
Sure.
Your government doesn't care about you. That's why you need a medical emergency kit. It contains life-saving medications like ivermectin, Z-Pak, and antibiotics. Stock them before they block them.
This is a special report.
Knowing how to invest your money is harder than ever before. Dealing with stock market volatility, record debt, and terrorist attacks requires new thinking. At U.S. Asset Management, we can help you see the world more clearly so that you can move beyond the chaos and invest with confidence. Call us, visit us online, or drop by our office. U.S. Asset Management, helping you make better decisions with your money.
So, Tom, they're saying there's 70 countries in negotiations and like 34 that are about to sign. Do you believe that, or is that Trumpism? Kind of, you know what I mean?
I definitely think. Look, most countries. Let's take Europe away from this for a minute. Most countries act within their own self-interest, right?
Sure.
So India has a lot to gain from this. A lot to gain in textiles, in precision manufacturing. They have a ton to gain. Vietnam,
from China, right?
Yeah,
because of
exactly.
Coming out. Yeah,
correct. Vietnam has a lot to gain, right? I don't think that it's BS. I think it's definitely true. I think you're dealing with these unelected bureaucrats in Europe, like von der Leyen, who's running around saying we're going to do all these deals with China, and they don't act in their own self-interest. I mean, Europe is on like a civilizational suicide.
Well, they're Manchurian candidates. I mean, they're vassal
Canada,
states.
same. Canada's not acting in the best interest of its own citizenry at all.
Yeah.
Right. So I think that's definitely true. I think there's a lot of countries who are going to try and do a tariff deal with us. I think China's putting out I've seen so much propaganda coming out of China. I mean, it's just hilarious. These guys are like, you guys don't care about your citizens. You haven't spent any money. I mean, like, we've spent money on wars, and that's a mistake. And I think, we've spent money on, turning over governments and doing bad things. China's spent money on infrastructure, probably a better decision, but they have the similar debt as we do, like I was going into earlier. And they're equally like a house of cards, and they don't have the world's reserve currency. So they can talk strong and say all this stuff, but it's hurting them. There's no doubt. So, but anyways, to your question, I think there's definitely many, many countries that'll benefit from doing deals with the U.S. And like I said, there's a ton of stuff that comes in through, like in automotive parts from Canada and Mexico, that's coming from China. So we have to rethink that. Do we really want to have that reliance?
Well, that was the game, right? We cut off China, so you move it to China or Canada or Mexico, and they import the Chinese parts that way and say it's from Mexico.
Correct.
Right. So that has to stop, essentially. Let me ask you this, and switch gears for a second. At some point, bonds are going to be a buy, right? I mean, they're selling off pretty hard. If Trump gets this thing together, I mean, that's going to be a trade. Do you agree?
I think that the linchpin on this whole thing is the Fed cutting rates, to be honest with you. And I think the Fed is run by a bunch of globalist minded people. I think
they're not working for us either.
No, not at all. Not at all. I mean, the San Francisco Fed governor said a week before SBV that the biggest risk to the system was climate change.
Yeah.
I mean, if you have that mentality, you're not even focused on hitting the ball, right?
Yeah.
So, I mean, I think, but importantly, rates need to come down on the short end so that people will move to the longer dated stuff. And it's not just foreigners. And, I talked to some of my friends who, manage money in bonds, and they're all scared to buy 10 years, and out because of the duration risk, right? I mean, you get a yield shift and you get killed, your capital gets killed. So that's a concern. So I think the Fed really needs to cut rates. And, this whole bout between Trump and Powell. Last week, Powell gave a speech on Thursday and basically assailed every single one of Trump's policies. That's not what he should be doing. That's not at all what he should be doing. So the guy hates Trump. He's going to make it as hard for Trump as possible. But if we want bonds to go, I mean, I think if you're an individual investor, you look at real yields, which is the yield minus the inflation. The bonds are trading at 27 basis points. And the last time I looked, US 10 years around 220. So that's a no-brainer. Like the US is not going to default on its debt. There's a lot of things, a lot of levers that the Treasury has that I think they're working on. And
Bessman's talked about that. He's going to do some stuff if Powell doesn't.
I mean, he can get rid of the supplemental leverage ratio. Well, he can't. The Fed can, but they can lobby them to do it, and there's no real reason they shouldn't do it. He can do, something to make it more attractive for banks to buy longer dated bonds in terms of allowing them to use those bonds and fund at face value or at par value of those bonds. He can also buy back off the run bonds that are trading at huge discounts and actually eliminate debt.
Mm-hmm.
There's a lot of 10-year, 20-year, 30-year stuff, mostly in the 20-year, 30-year buckets that are off the run that are trading at 50 cents on the dollar, right? If the Fed cuts, anything meaningful to sort of neutral, they can buy those back and reissue them, and they're paying the same interest with less the outstanding principal. So,
yeah, interesting. So I used to do a lot of business offshore in like Bermuda and Cayman and Guernsey with the captive insurance companies and their bond portfolios. I mean, they're basically all levered out to cover risk. But if you're a bond manager and you see, like you said, that 200 basis point spread over Germany, I mean, that's attractive, right? And if Trump gets his act together, I just think,
I agree with you, but
it's going to be a buy.
Bonds. I mean, I'm going to make a lot of people mad, but a lot of bond people are some of the worst traders in the world, and they're just mean reversion guys. So, when things break down like this, they'll start screaming and thinking the end is near, and the U.S. Treasury market's done, and nobody wants to buy anything. And part of what Trump's doing, I think, in some of these trade negotiations is, and I think this broke down during Yellen's tenor at the Treasury, but I think part of what he's doing is to try and get some of these countries to buy long dated paper in the U.S.
Yeah.
And, I think
the auction didn't go very well yesterday, right?
No.
Poorly.
No. But well, bonds are doing better. I mean, bonds are better today. So they've come all the way back from 10 years have come from 450 to 428. So, we're kind of in the realm of where we were, maybe 10 basis points higher, but in the realm of where we were when this whole, Independence Day thing took place. Certainly not at the tightest levels, but just before. So
last question, what do you think about Tesla and Elon? I find that interesting story. I mean, if he actually, again, if this works, I mean, Tesla could be a buy in here. What do you think?
I bought it before the earnings this week. I just thought that people were way too bearish on it. I mean, there's a lot, this AI thing again is, and all things to do with it, the robotics, the self-driving cars, people are trying to cast shade on it right now. And so there's a real story there. And I think, Elon's going to have to be, more engaged with the business, I think.
Yeah, and he will be.
And he will be. So I do think that, Tesla's a buy. And I wrote in one of my friends' Hummer MVEs or whatever this week, and it's a nice car, but it's like $30,000 more than the Cybertruck and doesn't do half the stuff and doesn't have the same range. So Tesla's still got a superior product, in my opinion.
Interesting. Well, a lot to talk about. Tom, thanks this morning. I appreciate you.
Absolutely. Anytime.
On the markets. We'll have you back. Take care.
Cool. Take care.
Bye.